So if you do work in external audit, then you are typically called an external auditor. And through working in audit, I've found that people actually just don't know what it is. And to be honest, before I started, I didn't really know that much either. And I just distinctly remember a taxi driver once thinking that it was something to do with ears. And spoiler alert, it is nothing to do with ears. So what actually is an external audit and why is it needed? So I'll try and keep this as simple as possible, but hopefully you're familiar with the concept of companies releasing their financial statements after each reporting period. And these financial statements, they'll be of interest to their stakeholders, so shareholders, their employees, their suppliers, customers, for example, etc. In their financial statements, the key information that you can gather is whether the company is making a profit in the year or whether they have enough assets to cover their debt. And the information then that you pull out of financial statements are actually really important, and it can impact stakeholders' decision making. And for that reason, that's why companies may be inclined to perhaps inflate their figures or manipulate them slightly where they can. And that is exactly where an external audit comes in. It's not actually always a legal requirement. It does depend on the company size and other factors. But nowadays, most companies releasing financial statements will have some sort of audit. There is this expectation gap that as an auditor, you will detect all fraud, all error in some financial statements, but that's not actually the case, because of course you cannot go through every single invoice or everything that's happened in the year. But that's where this whole threshold of materiality comes in, and auditors work to a materiality threshold. That is why the external audit opinion will make sure that the statements are true and fair and free from material misstatement. So hopefully now you understand the purpose of an external audit and why it's valued. But if you're not convinced, then there's a link below to some corporate accounting scandals, and that just really goes to show why an external audit is so important to be independent, and why there's such scrutiny in audit to make sure that the audit quality is of the highest standard. So hopefully now you kind of get what an external audit actually is and what the whole purpose is. It's all about getting to that audit opinion, but how do you actually get there? What does an external audit involve? So before we actually go into the day-to-day, you should probably know the whole kind of layout of how it works. You'll have a handful of clients that you work on throughout the year. It's never really just one client, unless it's of course a really massive job where they need external auditors all year round and do say full year reporting, half year reporting, etc. But typically it is a handful of clients, and they'll all have different year ends. So you could have one year end, say the 31st of March, another the 31st of July, and then the most common is usually the 31st of December. And that's where this whole busy season kind of comes into play. So an external audit is usually split into 3 parts. So this will be the planning stage, the interim stage, and then that whole big year end stage. As a junior member of staff, you'll typically be booked to each of these phases, so you will kind of see the audit through from the start to the finish. So let's get straight in with the planning phase. So the clue is in the name. It is literally planning for that year-end audit. So what you'll typically do in this planning stage, you will find out what kind of things are happening in the year. So at the moment, of course, coronavirus is a big thing, and you'll be finding out details about how different external factors, internal factors, how this has all impacted the entity that you're auditing. And you then will also do a risk assessment process, and through that risk assessment you'll kind of figure out what areas are more of interest this year, what are less of interest. So you'll kind of pinpoint what the lower risk areas are, the higher risk, and those significant risk areas. And one thing I will say though is, as a junior member of staff, you're not really that involved with that risk assessment process, purely because it's quite a judgmental area actually, and that comes with experience and practice. But what you are involved with is perhaps doing a preliminary analytical review. You'll start off at say month 9 or whenever your planning is, and you'll compare it to a year ago, and you'll see how balances have moved, and you'll have conversations with the clients. You will be having client interaction early on as an auditor, and these are usually pretty senior members of staff in your client's team. So it could be, for example, the finance manager, director, etc. And that's actually quite exciting and what's quite good about the job. But yeah, going back to that preliminary analytical review, you'll be finding out why things have moved the way they are, and things from these conversations that you have will help feed into then that risk assessment that some of those assistant managers and managers will look at and do once they put it all together. Other things that typically form part of planning is initially calculating a materiality threshold, and as a junior you won't really be involved in that too much because again there's some judgment in that. You will be carrying out research, just understanding how the industry's changed, anything that's impacting the entity at the moment. You could do some news researches and just see if anything's going on with them. You will also just really understand their business processes and just find out what controls they have placed. Usually for a new job, this of course would all be from scratch. If this is a client that your company's already worked on, then you will have this information from the prior year. And what's really important is not to just blindly roll forward the working papers and just change it, say from 2021 to 2022 and think everything else is the same. So you do really need to do that research and just make sure that things are getting updated properly. So those are just key things to really remember during the planning phase and when updating those documents. Moving on to the interim stage then, one thing to mention actually is that you will have to go through several checks. So typically you will have a manager review and also a partner review, and they'll just look through the work that you've done and make sure it's okay and leave these kind of review comments. Interim is a time where hopefully all of the planning work would have been reviewed by a manager. You will go through and clear those review points and just make sure to address those. And in interim, you really want to just refine your planning and just make sure everything is as it should be. Find out again as it's a bit later, find out if anything's changed again, and just really implement that into the audit plan for the year. But another big part of interim is actually then getting ahead for the year end. If there's a really tight reporting deadline, it can just be so busy that you do just want to get ahead where you can. So the profit and loss, that is for a full reporting period. So if it's a year's reporting, it's the profit and loss for that year. So revenue, for example, if you're interims during month 10, you can test at this point 10 months of revenue. The amount that they're reporting for revenue at month 10, you will get a breakdown of that in an invoice level, and then you can pick samples from that. And auditing does actually literally go down to samples, so you will have a look at their invoices, you will have a look at their bank statements, you will make sure that that money that they've said that they've received as income is actually there and has been recognised properly. So that's one example. Another could be their operating expenses, their cost of sales, just anything on that profit and loss side of things. But then you don't just neglect the balance sheet. So the balance sheet is actually a point in time, so it's harder to test this at a different period to that. But what you can actually do is you can test, say, any fixed asset additions and do a bit of balance sheet testing there. So another big thing is actually journals testing. So again, as a new joiner, that's not really something you would do early on, but you will just be doing those kind of sending out samples, getting those breakdowns, and just making sure that you can just do anything earlier than the year end itself. So then let's actually come on to this whole exciting year end process, the point where everything needs to be tested. So all balances will need to be tested, and they'll be tested to that risk assessment and to that materiality threshold that's already been calculated, although it will be recalculated at the year end point. But this is where the fun happens. As a new joiner, you'll typically be testing your cash balances, so agreeing the cash balances to the actual letter from the bank, and you'll perhaps also be testing, say, their debtors balance, so the money that they say that they're yet to receive, you'll test that and just check that the invoices agree to the amount. And you could also be testing, say, inventory. You could also be getting involved in doing stock counts. There's just actually just quite a lot of things, and it's typically the lower risk areas, and as you progress you'll then move on to those higher risk and significant risk areas and those more judgmental areas. So again, that's just not the end of it. You do need to get through that review as well. So your work that you will do, it is then reviewed and then reviewed again. So you're constantly then clearing points, and you're having to actually kind of balance all your different bits of work allocation. So you have to balance, say, your cash testing with your payables testing, and then reviewing the points from your inventory testing. But you do just need to bear in mind that you can be a bit all over the place at times, but hopefully you do have a good team that do support you early on. And then the final bit of the year end phase is the concluding and evaluating stage, and that's just where all of the misstatements and things will be kind of wrapped up, and you'll just do the tie-throughs to the financial statements. And as a new joiner, you can actually be involved in the call and cast, and that's just ticking through, making sure that the totals all add up, and making sure, say, a page number referenced in their contents page actually matches the page that it is. So that's quite a simple one, but something that I love, like, you know, just ticking through with your red pen, but I kind of miss doing that. So this next little bit is just all about the actual job description, and I think you'll probably gauge this by now from what I've said already, but it is like a team working kind of job, and that's what can be quite nice about it. As a new joiner, what's good is you'll have lots of experienced people there who can help you. So really make the most of that, ask the right questions, and just make sure anything you don't understand, if you're working on something for more than 5 to 10 minutes, something's probably gone wrong and it hasn't really been explained to you properly, or you're just not understanding it. So you'll of course have your teamwork, you'll need to be liaising with the clients, sending them emails, phoning them, perhaps having Zoom calls and things like that. And it just really helps to just know what you're actually asking for, because it can be so daunting initially speaking to them and not really knowing what you're asking for, and then you don't really want to get questioned because you don't want to look stupid. But it's completely fine. Now, as a new joiner, everybody knows you obviously haven't got the experience yet, but what's good is just you are just kind of thrown in and you can just learn. But again, like I said, you should have a good team there to just support you through whatever questions or needs that you do have. But something as well that you should be aware of, as a junior, you will typically be doing the work, but as you progress, you are then supporting others. So leadership skills really comes into it. And I will actually be doing another video on how your role changes throughout. So make sure you subscribe, because that is one thing that is actually really interesting about audit, because your job is just constantly evolving. So the good thing about audit as well is, as I mentioned, you can have a handful of clients, and these can actually be from different industries, different sectors, they can be different sizes, and it's quite interesting because you do then get to see how different companies operate. So to kind of cover any other business, the job is typically 9 till 5:30. So that's the big four firm that I work at, the contracted hours. But to be honest, with busy season, you will typically go over this. But a tip that I'll give you as a new joiner is that you don't need to stay because everybody else is still staying and they're still working. I think if it's already fairly late and you've done what you need to, don't feel pressured to stay. Just kind of just flag like, hey, am I okay to kind of go call it a day because I've done what I need to? And usually the team will respond well to that. Another tip that I'll give you as a new joiner is to just make sure that you are actually really comfortable and familiar with Microsoft Excel. So you actually use Excel a lot as an auditor. I think a lot of the testing that I do is documented in Excel, and it's just so important to be good at the basics, such as, well, I call it basics. I mean, it took me a while to understand, but there's like pivot tables, there's VLOOKUPs, and there's all sorts. I've actually got a blog about Excel tips, so just check that out. It's in the link below. And I would just highly recommend just practicing on Excel and just getting yourself a bit more familiar before you go into the role. Touching on to then the logistics side of things, and you will typically be working on client site. So you're never really in your firm's office. You are usually always on client site, out with the client, so you can, you know, go and see them face to face. But I guess now that everything's happened as it has, I think we are moving to more of a hybrid approach, and that's essentially where you go out to the client site depending on when it seems most beneficial. So you could work some days at home, some days on client site, and you might even have a collaboration day as a team just in the office. So that can be nice as well. The final thing that I will mention then is, to become an external auditor, you do need to be ACA qualified. That is something that I was able to achieve through my graduate scheme, and I've written so many blogs about this already. So if you are interested in the ACA, what it involves, what the exams are like, any exam tips, etc., definitely check my blog out, and I will be posting more videos, so make sure you subscribe to those. I guess that in a nutshell is essentially the job description. And so yeah, to wrap up, I guess teamwork, communication skills, you will need organizational skills and leadership as you progress. And I do just want to take this opportunity to say that I have honestly learned so much in the past few years in this job, and I think it does just open up so many doors. So make sure you really do just look into it and see if it is a job you'd want to go into. But I'm personally glad that I did. It hasn't always been easy, but it is an interesting job, and you do see a lot. Thank you so much for watching. I hope you found this video helpful. If you did, please give it a like. You can drop a comment below if you have any more questions, and I'll definitely be back with more videos, so make sure you do subscribe, and hopefully I'll see you soon.